Firms will get a 40% corporate income tax rebate in the upcoming financial year. It's part of a broader mix of short and long-term measures to help companies stay competitive amid cost pressures and global economic uncertainties. Ivy Chok with this report.
Committee 5 on managing impact on
Singapore formed a committee last year to chart a new way forward for the economy, sharpen competitiveness and secure good opportunities. During its midterm update for the Economic Strategy Review, one thing was clear: the need to move faster and take calculated risks. Prime Minister Lawrence Wong says the government will act decisively on the group's recommendations.
Some countries are turning inward, seeking to reduce their external dependence. But for Singapore, that is not an option. To prosper, we still need to be connected to the world, trading with others and integrating ourselves into global flows. Importantly, globalization has not ended. No country can succeed on its own. Most major products still depend on the global division of labor, combining expertise and materials from many countries, and on access to global markets to achieve scale. This fundamental reality has not changed.
Singapore is now looking to forge new ties in fast-growing markets like Latin America, Africa, and the Middle East. This includes setting up more embassies. But Mr. Wong acknowledged that doing business overseas is not easy, especially for small and medium enterprises. To help them, the government is providing more financial support. For one, grant schemes that support internationalisation will be raised to up to 70% for SMEs. They can also tap on schemes to deepen activities in existing overseas markets. Plus, increased quantum for trade and fixed asset loans, with more qualifying activities eligible for tax write-off. All this while developing capabilities at home.
We will build leadership in key growth clusters. And that means anchoring critical segments of global value chains here in Singapore, especially activities with high knowledge content and strong spillovers. Our goal is not just to host such activities, but to shape how these industries develop and where they create value.
Mr. Wong points to how investments in segments like semiconductor advanced packaging, aerospace, and biomedical sciences are paying off. He adds that Singapore must remain a place to test, develop, and commercialize frontier tech.
At the same time, we must be realistic. In absolute dollars, our public R&D spending will always be modest compared to the sums deployed by much larger economies. We cannot outspend them. Instead, our investments must be disciplined, focused, and strategic, directed at areas where Singapore has clear strengths and where our efforts can make a real difference.
But big corporations won't be the only ones receiving help. Up-and-coming enterprises will also be getting a leg up too. That's especially as capital becomes harder to come by globally, with startups finding it more difficult to secure the larger and longer-term funding that they need. Now, Mr. Wong says Singapore will be taking a more systemic approach to become a leading hub for growth capital. And this includes expanding current schemes to include growth stage firms, as well as setting up a new task force to drive strategy. To draw more listings on the Singapore Exchange, another 1.5 billion Singapore dollars will be invested to anchor high-growth companies. There will also be another top-up of 1.5 billion Singapore dollars to the Equity Market Development Programme to drive more participation in local stocks.
Deep and vibrant markets are one part of the equation. We must also ensure a strong pipeline of high-quality companies that choose to build, grow, and anchor themselves in Singapore. Some will be locally grown enterprises, others will be promising enterprises from abroad.
Taken together, Mr. Wong says these efforts will enable firms of all sizes and stages to succeed, and in turn, create opportunities for Singaporeans to secure good jobs and grow their careers.